Hello everyone, welcome to BISP Solutions. So this is our next session on Fusion Fixed Assets. For the previous one, you can refer to the channel where we have uploaded our first session. So today we will be beginning the remaining setups on the fixed assets. We have covered various setups like how to create the calendar, the fiscal years, the prorate calendar, and how we create the asset key structure, the category structure, and the location structure. That portion we had already covered. Now our today's agenda will be the remaining configurations. These first we are covering the mandatory ones, and then we will also visit the optional setups that we can have in place. So today's agenda will be to cover the asset books. Asset books can be of two types: the corporate book and the tax book. And then we need to have the asset categories. These asset categories we assign to our asset books before using them. Before using the asset book, we need to assign the asset categories. Then we'll provide roles to our user and the data access, and then we will see how from the user's end we can see what all access is provided to him. After that, we will be covering the depreciation related configurations, depreciation methods, the bonus rule that we can create, and the ceilings that we can have in place. So this is the whole agenda for today's webinar. So let's begin with our today's session. So the first one is the asset books. So asset books needs to be set up as it is a mandatory task before we can add any assets. So the assets are added to our asset books. If asset book is not created, then we cannot create our assets. It means you have the access of the asset books, and under those asset books you need to create or add your assets. So you can set up an unlimited number of independent asset books. Each book has its own set of depreciation rule, accounts, and calendars to organize and implement your fixed asset accounting policies more effectively. You can set up an unlimited number of independent asset books. So there can be two types of asset books: the corporate book and the tax book. The depreciation is computed based on the corporate laws for the assets which are placed in that asset book. Say if I have US Corp as an asset book, so based on the US corporate laws, we will be applying the depreciation on the assets belonging to that US Corp book. Same way, for the tax purposes, we can have a different book, the tax book. So in the tax book, the depreciation is computed based on the tax laws of the assets that are placed in that tax book. So this is the basic intro, and now if we talk more about the corporate book, an asset can belong to any number of tax books, but it must be belonging to only one corporate book. New or existing assets must first be added to your corporate book, and then it can be easily copied to all its associated tax book. You can set up multiple corporate books that create general entries for different ledgers or for the same ledger. So there can be multiple corporate books, and these can be associated with different ledgers or for the same ledger. In either case, you must run depreciation and create general entries for each book. So for each corporate book, you need to set up multiple tax books and associate all of them to the corporate book. A tax book must be associated with the corporate book so that the assets and the transactions are easily copied from the corporate book. What will happen? We will be maintaining the assets in the corporate book, and then periodically basis we will be transferring those assets to our tax books, to the relevant tax books for the tax computation purposes. So this tax book must be associated with the corporate book. This helps to maintain multiple accounting and depreciation representations for assets with minimal efforts. Tax book can have different calendars than from their associate corporate books. The calendar for the tax book can use the same fiscal year or the different fiscal year as the calendar for its associated corporate book. You can also set tax rules to control what transactions need to be copied from the corporate book to the tax book. You can associate the tax book to your ledger of its corporate book or to a different ledger. You can optionally create general entries and transfer to your general ledger. So we will be creating both the types of asset books, the corporate and the tax, after moving to our instance. Let's move to our instance. So this is my home page. So yeah, this is my home page. We will be creating the asset books. So let's go to the setup and maintenance. From setting and actions tab, go to setup and maintenance. And from here, we'll select the financials offering. And from here, the fixed assets. Now, if you see, these are the required tasks or the mandatory tasks. So under that, this is the task, manage asset books. Just click on that. From here only, we will be creating both our books, the corporate one and the tax one. So first let's create our corporate tax book. I'll give name as demo corp. Description So book class, you can see here corporate and tax, though two options are available, though by default it is selecting the corporate. Okay. Now the ledger we need to select. So whatever be your ledger, your client, the ledger that your company is following, just select that. I will select here as US primary ledger. I'll just search. I'll click on OK. Now the depreciation calendar we need to select. So I'll select this vision month calendar. And if you see, the prorate calendar is defaulting as your vision MTH CAL calendar, which is your depreciation calendar. If you want that your prorate calendar is different from the calendar that is your depreciation calendar, then you can select it here. And prorate calendar is created using the task manage prorate convention, which we have already seen. Now the current period we need to select. So current period are coming as per our calendar. So this current period will be your first open period for your fixed assets. In fixed assets, there is no option to open or close the periods as we have in GLAP. Here we need to have one open period, the first open period, which we will select from this option. So let me select, say, Jan 22. Okay, so I'm selecting an year before this 23. I'm selecting Jan 22. So Jan 22 is my current period, which is the first open period for me. And when we will run the depreciation, from there we will be closing the period. So we don't have a GL kind of a workbench here where we open and close the period. We have to open the period. We cannot open the period. It will be automatically opened as we will close the previous period. So if I am closing the Jan period after running the depreciation, it will automatically be closed and then Feb period will be opened. So this is the slight difference which we have relating to periods here. And then there is an option of divide depreciation evenly. So divide depreciation evenly means in all the month the depreciation will be divided in all the periods. But if I am having the prorate calendar where I have to charge the depreciation per day, so here I can take by days also. So here there is an option of daily calendar. So if I am selecting this option, I'll have to select by days here. Okay, these are the options which are available, which we will be seeing when we will be allowing the impairment or the physical inventory. If we need to maintain leased assets and all, we can select this. Then the mandatory one are these accounts to be selected. So I'll quickly select and let's proceed. Yeah, so account I'll give as 78990. This is our suspend P&L account as this is a default account. Then net book value realized gain account will be 78530. This is 78540. Then proceeds of sale gain is 78510. These are the account code values that are available in our chart of accounts. So see, if I'll show you here, you can go to the drop down and they will give you the values that are present in your account segment. So I am aware of the values, hence I am entering them. You can even search it from there. So cost of removal gain Cost of removal gain is your 78530, and loss is again 78540. Cost of removal clearing is 24220. This is the account value. And then depreciation expense is 68800. Deferred depreciation reserve is 16800, and loss is 16600. So these are the accounts that are entered. Now if you move to the rules, here we need to just enter the reference data sets. So you can have common, enterprise, or the reference data set that has been specifically created for these data objects that we can select here. Here we also have the invoice rules. So if you want to allow the unallocated payables invoice lines, from here you can select that. So this can be helpful when we are doing the mass additions. So these are the options available. Just save and close. So your book will be created, Demo Corp. Now I'll quickly create the tax book it also. So Demo Tax. Now when you will select the option as tax, this associated corporate book option will be enabled. Now you have to select here your corporate book that is associated with your tax book. So I have selected Demo Corp. Now ledger is same as US primary ledger. You can have a different ledger too. Then the calendars, I am also selecting the same. You can have different calendars too. I'll select the period as Jan 22. Then again depreciation, divide depreciation evenly. If you want to allow these options, you can allow. Again, we need to provide the account codes. So I will take the same accounts here. 78990. Okay. 78530, 78540, 78510, 520, 15930, 2422. Okay. 78530 removal, and 78540. Then removal clearing is 24220. Deferred depreciation expense is 68800. Deferred depreciation reserve is 16800, and this is then optional non-sale gain 16600. Okay, so these are the accounts value. Okay, now if we just scroll a little down, we will see that the option tax is coming here, as this is a tax book. So see, we have to allow the mass copy, then all the options will be enabled. Allow mass copy will allow you to copy the assets from the corporate book directly to your tax book. So this we need to enable in here. Okay, now just click on save and close. So this is how we have created our books. Let me check both the books. So Demo Corp and Demo Tax. So Demo Corp is your corporate book and your Demo Tax book is your tax book. This is how the asset books are created. Moving further, so this we have covered. Now we will see the asset categories. Asset categories are the we'll use our categories that we have created, the major category and the minor category. With the help of these asset categories, we can specify to which category does our asset belong. So while creating the asset, we need to always specify to which book and under which major and minor category does our asset belongs to. So that's why this is an required task. So asset categories help you define information that is common to a group of assets, such the depreciation method, the pro-rate convention, and then in the asset categories there is general ledger accounts, the default depreciation rules, the tax book depreciation rules, default subcomponent depreciation rule, and group asset depreciation rule. General category information will include the description of a category and the default information, such as whether an asset in that category is leased, owned, personal, or real property, or whether they are capitalized or not. You can also specify if assets by default are in your physical inventory or are enabled in Oracle assets. So I'll show you what all options are there, and then we'll create our asset category. We'll create one of the asset category. So moving to instance again. So again, this is the mandatory task, manage asset category. Show you the categories that are already created in the instance. See, the major category is vehicle, and under that the minor category are standard and heavy. So there are two categories under one major category. Likewise, if you say computer, so computer will have hardware, mobile, network, software, depending upon our client's requirement. If a major category is picked along with its minor category, we cannot create another asset category using the same combination. Okay, I mean to say, if I have created building and office as a combination, I cannot create another combination having building and office as major and minor category. I'll need to have building and manufacturing or office or furniture, like that. So different means one combination can exist only once. So I have created two categories, means I have created this demo category as one category, major category. But if I not select any major category, I will see no option are coming under the minor category. And this is because the minor category is a dependent value set on the major category. So first you need to select your major category. So I have created demo category as major category, and in the minor category now you will see two values are coming. So this is due to two values that are associated with the major category, demo category. So I'll select demo complex, or let me select demo office. Okay, now I can create one more category which will be having demo complex as the minor category. But I cannot create another category having demo office. Now category type can be lease, leasehold improvement, or non-lease. So I'll select non-lease. Ownership can be leased and owned. So owned we are selecting. This is optional. Property type and property class. Property type has option as personal or real. And then property class has this code combination 1245 property or 1250 property. And this we can leave as these are the optional element. If this is an intangible asset, we'll select the checkbox here as intangible. If we have this asset in our physical inventory, we can enable this checkbox. So these are the general options available. Now once you have created a category, you need to add it to your asset book. So I will add demo corp. Now when you will add the demo corp, all the details, like it's a corporate book and which ledger is associated, and the currency will be defaulting. Now you need to select the accounts again, the asset cost. So this is a building asset, building. So asset cost will be our building. So I will just click on search here, and I can either give the value. If I know that value, I can directly give the value. If I don't know, I can provide the code here. So this is building. Let me search it with description building. So there are two of the options available. So buildings and improvements and building maintenance and repair. So I will take 15120 buildings and improvement as my asset cost. Now asset clearing account. Asset clearing account I'll give as 15910. This is asset clearing account, and depreciation account is my 68160. See, these are all related to assets, so this is wrong. This is depreciation computer software. I need to have the depreciation which is applicable on my building. So this is plant and machinery. Let me search it from here. I'll just remove the value. I'll write depreciation here. So so I have this ROU building here for the depreciation of the, no, this is what this is depreciation buildings and improvement 68120. I'll select this one. Okay, and the depreciation reserve, basically your client will provide you with the required combination for these account code combinations. Here we will be having 16160. Yeah, so 16800 is depreciation reserve adjustment. So I will take this. Okay, so these are the one which are mandatory. If you want, you can have other like CIP cost, CIP clearing, and the correct code combination we need to pick in here so that the correct accounting is created. If I move to the default rules, I will have to add the default rules for this asset category. So I need to specify the depreciation method. So I will select any method which is STL, sorry, STL, the straight line method. This is the straight line. These are all the seeded ones, so you can select it accordingly. Life in year, I'll select 5 years. So all the assets belonging to this demo category, demo office field, will have the life in years as 5. Life in month can be 0. Means we can define these as per the requirement of our client. Okay, you can add like demo category 5 years. Sorry, demo category you can have as a major category, and office building you can have like 10 years, 20 years, 30 years, like that you can add in here, and based on the years you can define it. So here I'll take calculate monthly. These are the prorate convention. In the case our asset is added in a mid of the month, or in the like if I'm bringing our asset on 20th of March as today's date, then on which date, from which date should the depreciation be computed? That can be based on this calendar prorate convention. And if I am retiring an asset, then how my depreciation will be calculated, that clarity will come from this retirement convention. So these are some um, required field which we have entered. Now I will click on save and close, so my category will be created. Okay, so I have added just my corporate book in this asset category, but I have also created my tax book. So I need to add my tax book also in my category. So let me search my category from here. You can either search from the book name, or you can search it from the description or the category type. So this is my book. Sorry, this is my category. So only one book I have assigned to it, the Demo Corp. I'll add the other book also, the tax book, Demo Tax. Likewise, any book that you need to enter in any of the category can be added. So accounts I need to specify first. I should have noted down the asset values, account values from the Demo Corp, but let's see. Okay, so this was 68120. Then asset clearing was 515910. Okay, the depreciation expense was I think it was 68120. Okay, I have added this wrongly in the asset cost. Now depreciation reserve, it's showing 16800. Okay, I think I have added this one wrong. 15120. It's 15. Buildings and improvements. Okay, so this is the mandatory accounts that need to be added. Then I'll move to default rules. So my demo textbook is using a different depreciation rule or method, and hence it is different from my corporate book. So I will select any of the method which is different from the one that I have selected for my corporate book. So I am selecting this MACRS HY, and there are many methods here. Anyone you can select based on the tax depreciation computation, which is as per your tax rules. Life in year can be say 3, 5, 7. It's not like 1, 2, 3, 4, 5, 6, 7, 8. So based on your laws, this will be bifurcated, and in the same way your method will be designed. So I am saying that the life in years is 3. Okay, now you can have the bonus rules, which we will be seeing. Bonus rule, what is bonus rule, that you can assign here. Okay, the prorate convention, it can be different from the prorate convention that you have applied in your corporation book. So I am taking as half year here. Now there is an option of capital gain threshold years. I am taking this as 1. So this is how my textbook can be associated to my asset categories. So I have added both the textbooks in the asset category. Now moving further to my PPT, which is now a very simple task. So we'll assign our user. The user can be a person to whom we are giving the option to add the assets and perform the accountant level of activities relating to our assets and the asset books. So that can be an asset accountant or a asset accounting manager. In the real scenario, both of these person will be different, or they can be same to have the whole set of responsibilities that are available in the Oracle Fusion. But I'll provide a single user both of these roles. But in the real scenario, two different person can have asset accountant and asset accounting manager roles. So those roles shall be associated with the data access. So we'll have to give the data access of both the textbook and the corporate book, depending on the requirements that a user is having. But to demonstrate, I will give one user both the roles, and then we will provide the data access for both our books. If I move to the instance, this is the user Casey Brown, who is having unlimited number of access. If you go to the navigator, here you can see he is having this fixed assets access, where he has this asset and asset inquiry tabs in it. But if I log in with a different user, let me log into a different user. This is a basic user I have created. I have not provided any role, just the employee role I have provided. So you can see under the navigator, he's not having that option of asset. Neither in his home page he is having any access on the fixed assets. So I'll provide him the role and access, and then we will see the changes. So I'll go to the security console. I'll search for my user in the users tab, user 001. I'll provide both the role, the asset accountant and the asset accounting manager. Add role, asset accountant. So this is the role, the one with ORA. We did not to copy the copy role. We want to provide the seeded Oracle role. Add role membership. In the background, you can see it has been added. Now, if I add asset accounting manager, ORAFA, accounting manager, add role membership, click on done. Both the roles are added. Save and close. Done. Now, from the setup and maintenance, financials, I'll click on all tasks, manage data access. Manage data access set for data access users. This you can use. Users with data access you need to select, then you need to click on add. Username is user 001. Role is asset accountant. Security context is asset book. Now here you need to select demo corp, and then I'll quickly duplicate this. Asset accountant, asset book, demo, tax. I will again duplicate this, because for accountant I have provided both the access. Now I am providing it for accounting manager. So both the books access has been provided. These are the roles and security context. You need to check the asset. Save and close. Once we have provided the role and access, I need to run the process, schedule new process. Sorry, from the tool schedule process, select the option schedule process. Now schedule new process. Okay, I need to run the LDAP job. So retrieve latest LDAP changes. Okay. Okay. Let it run. Okay, submit and let it run. It will take quite some time to refresh. And till then, what we can do is we can re-log in the user that we had logged in this private window. Just let me log out and log in again. Password, I'll take it from here. Sign in. Still it's not there. Let it run. It is taking too long to complete the process. Yeah, I think now it will succeed. I'll try to log in once again. This takes some time to make the changes, but I need to show you the difference that has been made when we are providing the roles and the access. So we can use Casey Brown user only, but let me just show the difference that has been. Okay, let us give some time to this. Okay, this is succeeded now. Again, it's a long process, it's taking time. Okay, so till this is running, I'll log out the user and we'll proceed, and then I'll show you this till my session ends today. I'll show you the difference that has made. Okay, so after we have provided the data access, that asset tab will be available to the user 001 and he will be having the access for these asset book. And how we can check that, that also I will tell you. So if I move to my next slide now, so this was the configuration which was required for the assets creation. Now the depreciation method. Depreciation method refers to the accounting method used to allocate the cost of a tangible asset or a physical asset over its useful life. This represents how much of an asset value is used for a required period or a given period, and it allows company to earn revenue from the assets they own by paying for them over a certain period of time. So we are allocating the asset cost over the life of that asset, and this is called as the depreciation, and we use specific methods to do that. So if you see in the figure that has been illustrated, there can be various methods like the straight line method or the declining balance method, sum of years digit method, sinking fund method, working hours method, and constant unit method, and many more. As per the requirement of our company, we can have the method accordingly. So we can use Oracle Assets predefined depreciation method. Also, the company defined depreciation method you define to accommodate your financial and accounting needs. You may need to set up an additional accounting or the depreciation method that are predefined methods. So means in the assets application, Oracle Fusion application, there are many depreciation methods that are seeded, that are already available. But if you require, as per your financial and accounting need, you can create your own depreciation method. This may be required. For example, when you are using a depreciation method already and that needs to be modified. You can modify a depreciation method that's in use. So you need to define a new depreciation method. So we will be creating our own depreciation method. However, in Vision, you can only use the depreciation methods that are seeded, but in the fresh instance, in the real time, we can create the new one and we can use them. We define the formula based depreciation method when the existing methods are not adequate to handle our depreciation requirements. Assets provide predefined variables and functions you use to create formula based depreciation method. Any formulas you create are saved for later use. You must plan and thoroughly test your company defined depreciation formula to ensure that your assets are depreciating correctly. Otherwise, those formulas can cause unexpected and incorrect depreciation rates. Let's see how in the instance we'll create the depreciation method. This is still running. Let it complete. Okay, so I will go to the home. Then settings and action. Setup and maintenance. Here I can go to financials. Under financials, in the fixed asset, there is a task manage depreciation method. So as I am saying that there are already predefined methods created. So see, these are the methods that are already created. The one which we have used, STL. If you want, you can click on add it and see the fields in here. So we cannot make the changes as already everything is selected. So here the straight line method is defined. So depreciation basis rule is straight line method and depreciation in year retired, and calculation basis is cost. It's calculating on cost. Method type calculated. Life in months is 0 and life in years is 5. So these are the one which are seeded, which are already present. Okay. Now, if I need to create any method, I can use this create icon. Let's see if any other is also present. Yeah, so this is using the method type as formula. So these are also created. So this is the formula that is applied here. So if user wants, they can create their own formulas. Using the formula, they can create their own depreciation method. So I will just quickly tell you how to create it. A basic formula we will create. Basic method we will create. I'll write this as demo method. Reference data set can be common, enterprise, or the specific reference data set that your company is using. So I will select common set. Method type I am selecting as flat rate. I'll provide the rates. These flat rates I am providing. Calculation basis cost. Use recoverable cost. Yeah, we can have various options are there. So I'll select use recoverable cost. Depreciate in the year retired, and here then you can add the rates. So 10% I'm adding, adjusting rate as 0, and then we can assign this to our asset category. So this is how we had created one depreciation method. Demo method, this we have created. So this is how we can create the depreciation methods. Let me just try login again. Yeah, so this fixed asset tab is added now, fixed asset, and assets and asset inquiry is added. From here, you can also navigate to fixed assets. This is assets and asset inquiry. So when any asset is added, you can check it from the asset inquiry, and for looking into whole workbench of asset, you can click on assets. So any additions, adjustments, transfers, retirement, and as our period was Jan 22, the first period, so then 22 is available. From here only you can calculate depreciation, and then goes the period. So this is the whole thing that is available when you have the access. And you can see the demo corp USD and demo tax USD, the books are available here. So you can select in which book you are working in, and if you click on manage all books, so you can see the books that are available, and then the period close dates and all the information you will be seeing for all books that are that you have the access of. So the book class is available, the ledger that which that book is associated can be seen here. From here also you can calculate depreciation and run the create accounting process, and you can close the period also. However, this option is available open previous period, but this is used when no asset in that period has been added, then only that period can be opened. But once if for Jan period, say I have added the assets, I have calculated the depreciation, and I have closed that period, so again I cannot open that period. But say for February month I had no additions and I had closed that period, and now I want to open that period, so I can open it. So this is the difference of the period that has the asset, we cannot open it. But if no asset has been added in that period, then we can open the previous period. So this is about the manage all books option available. We will be coming back to this page when we'll be seeing the mass copy. So this is about the data access and user role that we have provided. I'll log out this user. I have shown you how the depreciation method is created. And now the last sheet for our today's session, which is the bonus rules and the ceilings. The bonus rule will help you to increase the annual depreciation expense for any asset in the earlier years of an asset life. And for that, we can use the flat rate, the straight line method, the table based, or the formula based method. Actually, bonus rules will enable you to uh, to depreciate the asset in the earlier year, means the depreciation expense will be more in the earlier year than those at the later stage of that asset. Say I have purchased any asset of 5 lakhs and I am depreciating it by 10,000 each month from the beginning of the month till the end of that month. In that way, we are equally dividing the depreciation expense. But if I wanted to depreciate at a higher rate and at the starting of the years, like I wanted to depreciate by 25,000 and then 25,000, then 20,000, then 15,000 likewise, over the year of the asset we are using, that can be set through the bonus rules. A bonus rule can use a different bonus rate for each year of an asset life. You can modify the rate at any time for current and the future fiscal year. We use the bonus rules with corporate books as well as the tax book. We can set negative bonus rates also when we amortize the bonus reserve. You cannot remove the bonus rule from an asset. If you have added the bonus rule, you cannot remove it. You can only change the bonus rule. If the asset isn't required to take additional depreciation, then you need to change the bonus rule to another rule with a rate of 0. Means once you have applied the bonus rules, you will have to use it, but you can make the changes, like you can reduce the rate to 0 if the bonus rule is no more required. Now, talking about the ceilings. Ceilings help us to review the expense and the cost amounts that we can allow at the maximum for each year of our asset life. We can specify the maximum annual depreciation allowance and the maximum recoverable cost that can be used to calculate the depreciation expense by using the expense or cost as the ceiling type. You can associate either an expense ceiling or a cost ceiling with an asset category. If you are subject to United States law, you must set up depreciation ceiling for an luxury automobile. For your automobiles which are luxurious, you can apply these ceilings there. And if you are using the expense as a ceiling type, you have to enter the maximum annual depreciation allowance for each year of the asset life. Oracle Assets uses the ceiling from the last year you set up for each year thereafter. For cost, you can enter the maximum recoverable cost Oracle Assets can use to calculate depreciation expense. Let's see in the system from which task we can manage these and how this can be done. Okay, so moving to the instance. So this was the depreciation method we created. Now see, this depreciation method will come under the required task as it is a mandatory task. But if you want to search for the bonus rules or the ceiling, these are not the mandatory tasks. These are the additional setups or the setups which are required as per the use of your organization. One is created bonus depreciation 100%. So I'll edit this and show you the fields. So bonus depreciation 100%. Rate type is year. One time depreciation it is allowing from year 1 to year 1. Means in the first year itself, whole depreciation will be done. The 100% depreciation will be done. If you need to create another one, we can create it likewise. I'll click on add. I'll give a demo. Reference data set can again be common, enterprise, or any reference data set that your enterprise is using. Now calculation basis can be annual depreciation, means yearly on the cost basis, or basis used by your depreciation method, means whatever depreciation method I am using, based on that this bonus rule will be used. Okay, if I provide annual depreciation, then year will be based on rate type will be based on periods or year. I can select that. Bonus class I can select here. It's an additional depreciation or increased depreciation. Okay, change in cost I can select from here. So the fields will change accordingly. Okay, if I select a calculation basis as cost, means it will be calculated on cost. Then rate type, what you need to select, period or year. Okay, so if period is there, then at every period that bonus rule will be applied, and yearly then once in a year. Okay, so that will be up. Now if you select cost as the basis, the rate will not be available. But if you select annual depreciation, I'm selecting rate type as year, bonus class is additional depreciation. I will provide the year, like from year 1 to year 5. If in 5, if my year if my asset is having 15 or 20 years of life, and I'm depreciating it by bonus rate or additional depreciation I am providing from first year to the 5th year, then I'll select this, and rate percent I can give as 10. So save and close. This is how I can create this bonus rule. Now in the asset category, I will specify the bonus rule associated to my asset category. I can add this bonus rule in my asset categories that have been created. Now seeing how the ceilings can be created, manage ceilings. However, these are not regularly used, as I have told you that we cannot remove the bonus rule if we have associated from any of our asset. We can just change the rule. So manage ceilings, in manage ceilings also I will give demo. Reference data set we need to assign. Now here is the check. We need to have ceiling type as expense or cost. Then we need to select which type of ceiling are we creating. So expense, and then in which currency. So USD dollar. Now from when to when, like my asset is placed in service from which year to which year, and then we have to apply the ceiling. So date I am selecting as if you want you can provide this field. However, this is not, like, if I don't give this and simply enter the amount as $5,000 and save and close, will it allow? Let me check. Okay, so this is the years to which my ceilings will be applied. Okay, let me provide the end date. Say I'll provide it till today's date. So the ceiling is created for expense type. If you want to add another ceiling for cost, you can click on add, and based on the ceiling type cost you can provide the details. So this is required to have a ceiling, means the allowance that we can allow for maximum amount of depreciation. Okay, means I can have maximum amount of depreciation as 5000 USD in the whole of these 3 years. So if it is exceeding, it will let us know that you are crossing the ceiling amount. So this is about depreciation methods, the bonus rules and the ceilings. And we have already seen about the other configurations like the asset books and the asset categories and how the role and data access is provided. So that was all for today. Hope you have gotten clarity about the configurations that are configured today and in our previous session. Thank you for watching